You are tuning in to the Atlanta Realtors Rundown, the official podcast for the Atlanta Realtors. We're here to keep you updated with the latest trends, topics, and keep you in the know of our ever-changing Atlanta market. We hope you enjoy this episode.
Welcome back to the Atlanta Realtors Rundown, everyone. Thank you so much for being here. My name is Matt LaMarsh. I'm your host today for a very special episode of our podcast here. Today I have with me someone that we traditionally don't get to hear too much from in the real estate world, at least as it relates to the Atlanta real estate market here, if you will, but certainly someone that we could probably have you in once a month
Sure,
to come talk to us about the economy as it relates to real estate, the economic outlook of kind of what's happening in real estate in Atlanta. But Domonic, welcome. Please take just a couple quick minutes, tell people who you are, kind of where you came from as far as your background, why you're here today to kind of share with us.
All right. Thanks. It's a pleasure to be here. My name is Domonic Purviance. I'm a subject matter expert at the Federal Reserve Bank of Atlanta. I have been at the Fed this will be my 13th year there. And in my capacity at the Fed, I'm primarily responsible for developing the residential real estate analytics that we use in our banking supervision function. And so we're always analyzing residential real estate markets, looking for risk and how that risk may impact the banks. But also more broadly, am responsible for outreach. And so we do events like this. I travel quite a bit talking about real estate, trying to expose out different audiences to the Fed's perspective, but also learning a whole lot from what people are experiencing in the market. In terms of my background, I've been in Atlanta since '97. I came to Atlanta, went to school at Morehouse and Georgia Tech, and my degrees are in city and regional planning.
Oh, okay. Nice.
And I've been working in real estate for the past 20 years here in Atlanta in various different capacities.
Fantastic. I love it. Well, no one better than for us to dig into, we're just coming off of a very interesting market, I think is the best way to describe it.
Yes.
Maybe.
Yes.
And for everyone here, these are Domonic's views. These are his perspectives.
Yes.
They're not representative of the Federal Reserve or anything else.
No.
So this is just a very informal conversation, if you will. But again, kind of having said that, the last 2 or 3 years has been abnormal.
Yes.
and interesting. So I think a lot of us now looking back on it kind of understand how we got to where we are today, kind of the movement. Obviously, no one knew a pandemic was coming, but
right.
I think, when strange events happen, it produces strange results.
Yeah.
So a lot of people coming to Atlanta and investing here that never would have invested here possibly in the past. But I guess give us the quick download on, what did you guys see? What at the kind of federal level, if you will, specific to Atlanta, were you guys measuring? Were you looking at? Were you looking at trends? Was there anything in particular that stuck out to you guys over the last 2 or 3 years?
Yeah, so I'll go back a little further. I came to the Atlanta Fed in 2010 after kind of working in Atlanta real estate for several years as a consultant and working for a home builder and developer. Mm-hmm. And after the 2008 recession, what I've noticed, really it's been since then, over the past 10 years, is that interest rates have remained relatively low for a variety of reasons. And, there were some movements, but historically speaking, we've had relatively low interest rates. Mm-hmm. And so many people refinanced their homes and were locked in at a low rate kind of during that period. We still had a lot of people coming to Atlanta, but not as much as kind of the late 90s and early 2000s. Mm-hmm. And so what's happened is, in addition, on the new home side, we built a ton of homes in the build up to 2008 in Atlanta, and we had a whole lot of vacant developed lots, and so home building did not fully recover. And so we weren't building enough houses. So the combination of a lot of people refinanced their homes, were locked in at a low rate, and then a whole bunch of there not enough, new home construction meant that we just didn't have enough inventory. And so going into 2019 and then 2020, right before the pandemic, we were starting to see just nationally, but also in Atlanta specifically, inventory levels were just very low. Mm-hmm. And if there ever was a spike in demand, we would see inventory get very, very low, mm-hmm. and that would create some upward pressure on price. And because of that, we began to track housing affordability. Housing affordability is normally, the reason why we look at affordability is because it's normally the leading indicator of where we are in the cycle. Mm-hmm. So when housing becomes unaffordable, then that means either people are trying to stretch to buy, or eventually demand dries up, and it is sort of the beginning of the downward slope in the cycle. And so when going into 2020, inventory was low. We know that housing was affordable, but if there ever was sort of this spike in demand, we knew that supply levels would shrink and prices would go up, and that's what we saw during the pandemic. And part of it was the response to the pandemic was to low interest rates, to spike demand, and that's exactly what happened. But we saw just to put in context what happened over the past few years, the 30-year fixed interest rate at its lowest was like 2.6%.
Crazy,
I mean,
right?
And so as far back as we track, we have never seen interest rates that low. So you're talking about historic, unprecedented decline in 30-year fixed interest rate. And so not surprisingly, that a lot of people saw an opportunity to buy and lock in at a low rate and buy a home that they could never afford before. And so if if rates dropped from like 4.5% to nearly 2.5%, then I mean the price of the house that you now can afford just goes up exponentially. Mm-hmm. And so a lot of people bought houses, and a lot of people saw the value of their houses spike because we already started with short supply. Mm-hmm. When people had in New York, New Jersey, some of your high cost markets, they were impacted by the pandemic. They saw an opportunity to sell, cash out, and they came to a market like Atlanta and bought a lot of houses. Yeah. And either they paid cash, or they were able to bring cash to the closing table, paying above the asking price. Mm-hmm. So all of that. So we went from a market that had kind of tight supply. Atlanta was still relatively affordable, to a market where demand just spiked. The strength of demand in this cycle probably was on par or either exceeded 2008. And we know that because home prices in Atlanta went up 27% in 2021, according to our numbers. Mm-hmm. I mean, that, in 2 years from 20, so I'll give you, just put in context, January 2020, I think the median price house in Atlanta was somewhere around $250 or $260. In January of well, I wouldn't say January of this year, but the peak of the cycle, mm-hmm. I'd say the peak was June of mm-hmm. last year. Home prices in Atlanta were like, $360. Mm-hmm. So you had $100,000 increase on median in just 2 years. Home prices were up 40% in 2 years in Atlanta. And so that was obviously unsustainable. Right. And so, as I mentioned, prices peaked in June. The Federal Reserve, in response to, we can talk about inflation a little bit later, but inflation is sort of the elephant in the room in the economy. And the Federal Reserve's response, the FOMC and specifically, the beginning of last year, started aggressively raising interest rates to get inflation under control. And a sector like residential real estate that is very rate sensitive obviously was impacted. And the net result of 2 years of unprecedented increases in home prices, plus now unprecedented increases in interest rates, led to a rapid decline and deterioration in housing affordability. Yeah. Not just here in Atlanta, but everywhere else. Mm-hmm. and what we saw, Atlanta went from being one of the more affordable markets in the country, is why everyone wants to move here, to being very, very unaffordable, specifically for the people who make the median income in the region. And so what's affordable for us is, if you make the median income, you shouldn't spend more than 30% of your income on a house. That's principal, interest, taxes, and insurance. In Atlanta today, the median income household, which is about just around $80,000, would have to spend somewhere around 42% of their income to afford a house.
12% more, yeah.
Right.
Yeah.
So it's unaffordable. Mm-hmm. And that's why demand has declined. We've seen a lot of indications in the Atlanta market that, of course, we lag other places in the country. Mm-hmm. And so there's some parts of the market that's still doing relatively fine. But demand has dropped significantly. And as affordability continues to be a challenge going into this year, we can expect, people to be a little bit hesitant to pull the trigger on buying a house.
Yeah.
I could talk more, but let's just stop it.
No, that was a wonderful synopsis, because I think what you just said is what every Atlanta real estate agent or realtor has been feeling for the last 2 years. I think we all knew to some degree it was unsustainable. Yeah. We didn't know for how long this was even going to go on. Yeah. And I think there's a misconception, at least, and I'll just give a quick perspective on what I've heard from hundreds of agents all around Atlanta, was it's not a fun market to be in. Everyone thinks it's rainbows and unicorns, and there were a lot of people that lost out that couldn't afford affordable housing because affordable was no longer affordable, but also to your point, a lot of higher price market, people coming in with cash and plenty of it to spend above and beyond appraisals and buy for cash and everything else. But, sitting down to present 34 offers to a seller is a very different animal than like 2 or 3 or maybe even 1 after the course of a week or 2 of being on the market. It's just bananas. And you're right, the competition at the agent level, but also in the market, because things were just so crazy for what felt like an extended amount of time. Yeah. But, to your point, there were a lot of leading indicators that kind of ramped us up to 2020, 2021 that, we had no idea what it was going to turn into. But kind of looking a little further down the road now, and especially as it relates to affordability, because I live here in Sandy Springs, affordability is always at the top of the mayor's list, and everyone that wants to be in Sandy Springs are thinking about how do we create more affordable housing and more affordable housing options. I know the city of Atlanta is looking at restructuring some ADUs and stuff like that. So give us, and again, we're not going to ever hold you to any of these numbers, but just your perspective, your professional opinion of where do we head from here? Where do we go from here?
Yeah, so I mentioned demand has declined because of the lack of affordability, and people who could sell their house in New York can't sell it or can't sell as much. So you look at household formations in Atlanta, it's declined. The percentage of people who think it's a good time to buy a house is at historic lows. So we're entering the peak selling season of this year. Probably I guess it starts at the after Super Bowl Sunday is typically when we start. So we'll know in a few weeks where the buyers is what the buyer's thinking about the market. But going into it, we know that we're in a very the buyers today are very hesitant. Sellers are also very hesitant to put their house on the market because they're not getting the prices that they that their neighbors may have gotten a few months ago. And even though interest rates have started to come down a little bit, and home prices have started to come down, affordability still is relatively low. And so I think going into this year, there are a lot of negative headwinds facing the housing market. The Fed is so the FOMC is meeting in not next week, but the week after, to decide the direction of monetary policy at the beginning of the year. They've already communicated that their target inflation rate is 2%. It's not likely that we'll get to 2% this year, right. And they know that. But they have communicated that they're going to be aggressive about getting inflation under control. And that means tighter monetary policy. Unless something happens in the economy, you always have to give this caveat. And
Sure.
The Chairman Powell does it all the time. But, we are watching what happens in the economy and the numbers, and they have the right to change course, if need be. But right now, what we know, kind of the rooms that I sit in, and here's some of the, we talk to a lot of, so it's not, so demystify the Fed for a second. So we're not just looking at numbers and stats and kind of drawing our conclusion about not only monetary policy, but supervision. We are talking to people. We spend a lot of time out in the field having conversations with people, understanding what's going on in their particular market, and we're getting that information real time, and that's informing our president, President Bostic, on his thoughts on monetary policy, and that happens around the country in every Fed district. And so, I always say that there are very few institutions that are as informed about the economy than the Federal Reserve. And that doesn't mean we always get it right. We still get it wrong. But, I mean, we, at least is an informed wrong decision, I guess, as formed as it can be. And so I do think that, so all of that means that, interest rates are going to be very volatile this year. It's likely that the Fed is going to continue to raise rates. And so I'm not predicting that, but I'm just based on what we know now and based on what the FOMC has communicated, there is, the likelihood for us to continue to tighten monetary policy, even as inflation is starting to trend downward, And so it's a very, there's a lot of calibration that goes into, like, when do you stop and what percentage, how many basis points you raise. And so, people well above my pay grade are in the room making those kind of decisions. So I do think the housing market moving into this year is going to be very challenged. I know that home builders are I just did an event earlier this week, and, one of the things that they're seeing is a pretty sharp increase in cancellations. So they have a lot of inventory in the pipeline, and once those homes are delivered, a lot of times people can no longer afford it, or interest rates have changed, or they've decided that they don't want to buy it anymore, so they're left with this inventory. And one thing we didn't mention, Atlanta has had a significant surge of people, of investors coming into our market and buying real estate. And so builders have, in a sense, been able to offload some of that excess inventory to investors. Investors have, I think, the last number I looked is somewhere around 30% of sales in the region were to investors. And that includes institution and mom and pop folk as well. That's a significant amount of activity.
It sure is.
And even they're pulling back because they see sort of what's happening in the market. No one wants to buy when prices are trending down. So I guess the last thing I'll say, because again, we could talk all day. As I mentioned, prices peaked in June of last year. The last number that I've seen, home prices are already down about 7% in Atlanta from the peak. And so, and I think that we're sort of at the beginning of the decline in values. And so the thing that I'm most concerned about is where we'll land in terms of home price, the contraction in home values.
Sure.
And so there's some people, I've heard, estimates range anywhere from 10% all the way to 20%. It seems likely that home prices, we're already at 7 now, so it's likely that, we're 10% is, reasonable.
Sure.
To think. Just remember, we had 40% increase in 2 years.
Yeah,
so.
in the context, just like the interest rates, right?
Yeah,
like,
right.
I mean, I asked a broker a couple of weeks ago that was in here recording a podcast with us, that have been in Atlanta real estate for 40 something years. When was the last time you saw 2.65 or 2? Never.
Never.
And more importantly, do you ever think we'll see it again? Absolutely
No.
not.
No.
So I think, and this is what we try to do on a daily basis with our clients. And this is kind of the next gear I want to shift into, consumer facing, right?
Yeah.
What we as realtors are constantly trying to stay on top of the market, what's happening, because we're educating buyers and sellers on the movement and what's happening and stuff. And certainly, to your point, certain areas are experiencing a little more stability than others.
Yeah.
Certainly there's more volatility in some other areas, but generally speaking, 7% in the context of almost 40
is not high.
It's okay, right? It's
fine.
not the sky is falling necessarily, but along those same lines, and again, for transparency and honesty's sake, at least, looking forward for consumers, I think a lot of people have looked at Atlanta, and I'm born and raised here, so during the Olympics, a lot of people came to Atlanta. They fell in love with the city. They loved, the proximity to the coast and to the mountains, and being able to ski and go to the beach the next weekend. And we saw a lot of people stay after that, and internationally as well, not just from other places around the country. So. Now, a lot more people have moved here from other areas that seem to be staying for the most part. And of course, you just mentioned investors as well. Kind of looking down the road for consumers, because again, all you guys can do is make predictable and estimated guesses at what's going to happen. But in terms of just the investment side specifically, because I try to get my buyers and sellers to think like investors. I think when you think about it that way, you think very differently than this is the family, this is the home that I'm going to raise my family in, and we're going to, send our kids off to college and so on and so forth, or the school or whatever. I try to get them to look at it as just a money decision, even if it's just for a moment. But we've heard a lot of news around, especially at the National Association of Realtors, that Atlanta's like the number one market to watch this year. And we think that's a good thing. But there's a lot of, like you said, caveats that come along with it. From the consumer side of things, is there anything fundamentally? I mean, I know business is still moving here, and the economy as a whole is being stimulated in various ways between electric cars and batteries. And I mean, there's a lot of moving parts that we look at Georgia's economy as a whole. But anything specific to real estate that you think consumers should know about?
Specific to Atlanta?
And real estate in particular, or anything, honestly?
Yeah, I mean, I read the article from the National Realtors Association, and I thought the point that they were trying to make is just fundamentally Atlanta has some competitive advantages that other regions don't have. It's still an attractive place for people and companies to move because of its affordability, proximity to the airport, and transportation centers. And so I think Atlanta, just from an investment standpoint, still has some pretty strong fundamentals that make it an attractive place, not only to live, but also for long-term investments. If you're depending on where you buy, I mean, real estate is always so locally dependent, but if it's close to transportation and employment centers where new developments are going in. I personally live near the Beltline in Atlanta, so I'm seeing all kinds of development happening, and that's always a positive thing. You see the cranes going up and you see things being developed. You always think from an investment standpoint, you want to be in a place that's growing and not necessarily a place that's declining. Atlanta certainly is not a place declining at this point.
I love that. Awesome. So kind of getting back to the affordability thing, because again, I feel like all over North Metro Atlanta, especially in the area where I work and live and play, there's a lot of cities and counties and municipalities that are looking at affordability. They're trying to figure out how to make it more attractive for multifamily, for single family homes, townhomes, a mix of categories, right? Because we've seen, at least here in Sandy Springs, people come and they live in an apartment as they relocate for a job, and then they end up falling in love with the city, and then they stay here, and then they want to buy here. But from a metro whole, I guess, what do you think we can do as far as affordability goes? Or, I mean, how do we kind of reimagine? Because Atlanta is what it is, but it can also become something different, especially as it relates to affordability.
Yeah, so there are a lot of strategies that are being explored uh, uh, in a lot of people looking at ways to sort of build more affordable housing. And so I think it's all interesting. I think it's really difficult though, because the amount of affordable housing we can build through all of these kind of subsidy kind of programs is never equal to the volume of need that we have for affordable housing. And I'm not just talking about low to moderate income housing. I'm just saying, like, for the median income household, like today cannot afford the median price house in Atlanta.
Right.
So what do you build? And so some of the solutions that are out there in terms on the construction side is we're trying to find ways to build cheaper. We're trying to find ways to build greater density. You had mentioned kind of the city of Atlanta exploring changing their policy relative to ADUs. One thing that I am starting to notice is sort of innovations on sort of the transaction side that I think are interesting. So there are a couple companies that have created what is what's being called power buying option. And so what happened during the pandemic and sort of continuing now, there's just a flood of investors buying more affordable product to use as single-family rentals, and they pay cash. And so if you're a first-time buyer and you need down payment assistance or whatever, you're not going to be able to compete with someone who's paying cash.
Right.
And so there are a couple companies. I think Ribbon is a good example. I mean, they still have a very small market share, but they essentially what they do is they buy the house for the buyer until they get their finances in order, and then they buy it back. The buyer buys it back from Ribbon, and so that allows the buyer to compete as a cash buyer in a sense in the market. There are other options that I've heard that allows investors to participate in the home buying process as sort of an equity buyer, and so there's a company called Home LLC. Home.LLC that essentially helps a buyer get to that 20% down payment by offering sort of a 15% equity investment in the house that you have to sort of pay off in about 10 years. But that, if the difference between, 5% down and 20% down in terms of affordability is huge.
Yeah.
It means you don't have to pay PMI. It means you have, probably a lower interest rate. Your mortgage payment is going to be, several $100s lower if you're able to get to that 20%. But one of the biggest barriers now is people can't, come up with a down payment to buy the house. And that's why a lot of people are renting today. Yeah. And so I think whether or not those are long-term solutions, whether they have any kind of market penetration, I don't know. But I think the real estate market is primed for innovation. And the idea that people are going to be able to buy a house and pay, have 100% ownership of it, just the model that we're used to. I mean, I think it's great. This housing is still where most households in America store wealth and gain wealth and sort of increase their wealth long term. But how do we do that? How do we innovate that in a way that it allows more people to be able to have some share of ownership in real estate? Given the fact that, it's far more expensive. I remember when I first came to Atlanta, the majority of new home construction in Atlanta was less than $250,000. I mean, you could get a starter home for, $150,000, $170,000, and a decent house, a detached house. You can't build a new house in Atlanta for less than $300,000. I mean, you could. It'd be very difficult, and you probably wouldn't make a profit. This is why builders don't do it. So it's very difficult to do that. And so I know it's a lot. This is drivable. We need to build more affordable housing, but it's hard. Yeah. It's not that builders don't want to do it. If they could afford to do it and they could sell it and make a profit, they would do it. They just can't. Yeah. And so, on the regulatory side, there's a lot of things that make it difficult for them to do that as well. That's, according to them, that's what I heard, 2 days ago when I went to the Home Builders Association. But yeah, so there's a lot. It's a lot of challenges to deliver affordable product, to build it and to keep it affordable, given that demand is always exceeding supply. And so I think, more broadly, we have to think about how to innovate what we do and how that would change how we buy houses long term. Those are kind of things that I'm thinking about. I don't have an answer, but I'm seeing people get very creative and create some innovative solutions. And I think we should be open to explore that.
Yeah. Well, and like you said earlier, right, we don't know where the ball is headed. We're all guessing and we're all predicting and we're all evaluating what's happened in the past using those, as you mentioned earlier, the lagging indicators to prior cycles and going, okay, is this going to be the same thing? Is it going to look different? And I think you're right. I think that, until that 42% becomes 35 and eventually 32 and maybe even down as low as 25, do we really then begin to go, okay, and as values and prices maybe start to plateau or even decline, in the next year or two, if that's actually what happens, then we will see a change, right? But there has to be like pretty massive change across the entire market. We aren't talking about a little bit over here and a little bit over there. It has to fundamentally change for an extended amount of time.
Yeah, and I wouldn't assume that, that affordability would go back down. I mean, you got to think New York or San Francisco, these markets are always unaffordable, and it's never going to get to a point where incomes will catch up with the price to own a house. And so, I would hope that there's going to be pressure for affordability to decline. And right now, the only place that you can sort of gain some measure of affordability is to take out the price of the house, so to subtract from the price of the house, because interest rates are going to be relatively high. We're not seeing any upward increase in income, so people can afford more. And so really right now, at least in the next year, we're going to have to see some downward pressure on price in order to create affordability. But as you know, inventory is also low. So when inventory is low, even if you see demand go down, it's hard for you to see prices to get to a point where where housing is affordable overall. So who knows? We may be in a situation where we never get to 30% of income as a share. And that means we have to really think creatively if we're going to get more people to buy a house. Yeah.
Well, and I know one thing we've talked about in the past around the association here is, sustainability and affordability. Most people don't think those two things go hand in hand, but it is actually proven that when you build with green materials and you use more efficient materials in general, that even in a tiny home or an ADU or even a, 1,500 square foot single family home, it can actually be more efficient, therefore saving you more maybe on utilities and construction costs and everything else, that removes $7,000, $8,000, $9,000 from the initial cost anyway, which is nothing on $300,000.
Yeah.
But as it relates to like ADUs and stuff that require a smaller footprint and also fill maybe a different need. We're not just strictly talking about short-term rentals here. We're talking about something that, you could have an older grandparent or parent live in or an au pair, or, there's a lot of different uses for these, obviously. But I know a lot of people don't think about sustainability in conjunction with affordability, but I know there are a lot of innovative companies that are starting to come to the market with some of that stuff that makes it a little more affordable. But of course, then we're talking about land and availability of it and everything else.
Yeah, so. It is a challenge, and I'm hopeful that people that are thinking creatively will come up with solutions. That's the sort of the American way to sort of innovate when we face these challenges. But I do think the balance of my optimism is I do think about there are plenty of places in the country where it's just there's just more renters because people can't afford to buy. Or you think about home ownership in America has always been sort of higher than in other countries, but it doesn't mean that it always has to be. Which I think will be somewhat tragic, because that's how people gain wealth, and so we want to be able to make that opportunity available to people, but we're going to have to be creative about making it happen.
Well, I think to kind of continue that same thing, we're a smart group of people in this country that will we figured out much bigger problems
Yeah.
in the past, and I think we can figure this one out as well. But Domonic, I really appreciate your time. Is there any other resource or website or tool that you would recommend people that are kind of craving a little more information, whether it's affordability, the market, the Fed, all of this in general?
Yeah, we have a pretty robust sources of information on our public website, theatlantafed.org. You can find the Homeownership Affordability Monitor. That's a tool that we create out of the Atlanta Fed, and it's publicly available on our website. It has most markets in the country. You can drill down to the county level and look at affordability trends. And there are several other tools about the broader economy. We have several articles that we write. That we publish around not just housing, but banking and the economy. And if you do commercial real estate, we have tools available for you as well. So
that's very good.
I encourage you to check it out.
Awesome. Well, thank you so much for your time today. I really appreciate you joining us, bringing your expertise and this subject to us, because I think, again, we hear a lot about headlines and attention grabbing. Yeah. It's nice to sit down with someone that's even keeled and is optimistic, but also realizes the potential tragedy that kind of comes along with this. I think it's very refreshing. So really, really appreciate your time today.
All right. Thank you.
Absolutely. And thank you all for listening to the Atlanta Realtors Rundown. We really appreciate you being here and subscribing to the podcast, but also leave us a review. We'd love to hear from you what you enjoyed about today's episode or any other episode that you've listened to. We'd really appreciate that. And we hope you have a great rest of your day. We'll see you on the next one.
Thank you for tuning in to the Atlanta Realtors Rundown. Please subscribe, and for more information on how to get engaged, check us out at atlantarealtors.com. We look forward to having you join us for the next episode.